Fantastic day, quality hypos, quality opportunities. Not a huge range or anything like that. Just a little over, looks like $1.30 for the session. But some nice rotations and nice opportunities. So let's dive into the pre-market prep and what we saw in the day. All right, so 8:57 this morning, a couple minutes before the pit opened. Hypo 1, move up to 5160s area to find sellers, which takes us down to the 49.20 to 50 zone. So 5160s, move up to 5160s. So that's this area. We'll make it red bearish area, our main hypo 1. To move down to a target area of 49.20 to 50. So that's quite a big target. Did not get it, but we'll highlight it. 49.20 to 50. Okay. Hypo 2. Sellers control right off the open. Break down and hold 50.70 to move down to that same target. So we were interested in 50.70. Which would be another bearish zone if we were able to trade through there. And hypo 3, break and hold above 5160 zone, which takes us up to 5240s. So same zone. If we were able to break and hold above it, that would put a target of 5240s. Okay. So those were the plans we laid out. Most of this stuff, I get a lot of questions on Merit. How do you come up with your hypos? What's going on? It's most all generated from market profile, structural areas, the way we teach it in the course. So if you want to learn how we do this, the course is certainly the place to go there. All right. So what did we do? We started drifting up, kind of a grind, not really getting engaged on the order flow quite yet, but then it starts to pick up. I know we called out in the room, we were seeing kind of a compression into this level, which would probably lead to that pop into the 60s. So we certainly got that. It's just as important to know when not to trade as it is when to trade. And so when you see the buyers in control, when you see them, starting to get into kind of an uptrend and whatnot, it's certainly not time to just begin shorting just because you're at a level. That's not the way we operate. It's not the way we recommend anyone operates. So wait for that failure. Wait for those sellers to start to show up, and then you can get involved on those retests, either here or this one was another beautiful one there. And so securing some trade location there, which makes sense with our hypo 1, we can see that it's playing out. While there wasn't a tremendous amount of selling on the tape, it had certainly, the buyers had become shut off. That was at least obvious, so that was fine. So we start to get involved, and once it starts to kind of chop around here, you should have taken partial profits. At least, again, that's the way we operate. And there's really not much edge, in our opinion, or at least in our market worldview and framework, as to what's going on here. But all you know is that you've gotten in from really good trade location. In fact, I made a post similar to this. Let's see if we can find it. There's that bit of compression, moving to the upper area, may lead to that pop to that 60 cents. We talked about that. Hard to ask for much better hypo 1 than we're unfolding. One just had to be patient and wait on the buyers to finally fail, just like I was mentioning here in the recap. All too simple from that point. Nice excursion lower here as we head into K period. This K period here, final market profile period of the day. Great spot to book a little profits if you secured Hypo 1 earlier. Small piece for K period fireworks into the big boy targets would be fine. Based on the time left in the pit session, which by the way wasn't much, there was 8 minutes left in the session, flattening out here into 70s, that's that next red level that we have right here, is a fine choice. If you're able to just monitor this area closely, and if buyers really start to take control, then use it as a reason to exit. Otherwise, you might get lucky and it break down if you're able to do this well. So it comes into the area. Are we seeing a lot of buying? What's the tape look like? Should we get out? Because we're running out of time here and we have come into our kind of our next level. In this case, the sellers were really, really strong. It just blew through there. We didn't see really any buying until much lower down here. So you could have gained an extra 20 cents out of that trade by applying that kind of discretionary skill as to not just there's a level, but questioning what is the reaction at the level. And to be honest, it's really no different when we start to begin to look to get into a short. We don't just short because it's the level. We look at the reaction within a really good framework. That's first and foremost. If you don't have a good framework, then your levels are garbage, so you're probably going to trade poorly. But within having a good market worldview and quality, truth-based, market-generated, information-based risk-reward landscape, boy, that's a mouthful, then you're able to have much better levels, which are in tune with the market's true nature and what's going on. Then you're able to work on looking at the reactions from those levels from an order flow perspective and making better decisions. So looks like this market wanted to gun for our big boy targets. It really did. We just ran out of time here. We got the reaction, floundered around for too long, and then looks like people woke up and started to get it going there. But nonetheless, great Hypo 1. A lot of great execution by some students, capitalizing on this opportunity. And so that's what I saw in crude oil today. Cheers.